Gonna
Okay,
wait till
everybody,
you share your screen.
welcome. I'm going to go ahead and welcome to our presentation. I'm going to go ahead and turn this over to Denise, who's our moderator today, and we'll go ahead and get started.
Good morning, everybody, and thanks for joining us today on Friday, April 10th, for our webinar entitled COVID-19 HR, Tax Credits, and Financial Assistance. This is Denise Keddy, and I'm your moderator for this session. A couple of quick housekeeping notes to be aware of before I introduce today's panel. Our webinar today is going to be about 2 hours because of the number of topics and questions that we're going to work to answer. Please take a moment now to visit the chat section on the Zoom to download the presentation. If you're familiar with our websites, if you're familiar with our webinars, this one is going to run a little bit differently than the previous webinars that we're traditionally doing. First, we're using Zoom, and for most of us, this is not our traditional webinar platform. But the Ethos brand tagline is the magic of human connection, and that is what we are trying to do today by holding this webinar on Zoom. If you have any questions during the presentation, please post them in the chat area on the Q&A section, the chat area, I should say, during the presentation. If you'd like your question directed to a panelist, please note it when sending in your question. We have a number of topics and speakers today, and today we're going to do a little different. We're going to hold the Q&A section after each topic that we discuss. Just a reminder that the webinar is being recorded and all the accompanying materials are protected by copyright. Our presentation today provides general information and does not constitute tax or legal advice. The information that is offered during this webinar is as of today, April 10th, 2020. As always, we recommend that you consult your own tax and legal counsel to address your specific situation. Ensure you have the most current information, especially now during these times where there are changes and updates almost daily because of coronavirus. Let me introduce you to our expert panel today. Oh, cool. Thanks, Linda. Our human capital expert is Linda Duffy, president of Ethos Human Capital Solutions. Linda and her team are known for building the magic of the human connection with their consulting, recruiting, training, and also payroll support programs. The Ethos team works with your company by developing strategies for your business leaders to get the right systems, people, and culture in place within your organization so that you as a business owner can focus on running your business and achieving your goals.
Denise, let me just jump in here. You see the links on here that aren't normally on my bio slide. That's a link to our website. We have a specific page up that has some COVID-19 information on it. So feel free to go there and download that. It has some helpful links, and then you can also join our mailing list if you're not already on it. I assume most people here are already on it, but if you aren't, you can join it from our web page there. And again, there's another link to download the slides.
Perfect, thank you. Our next expert today that we're going to be speaking with is Salaried Gonzalez Hicks, and she is the payroll and HR specialist with Ethos Human Capital Solutions. Salaried joined Ethos about 2 years ago and has been working closely with the clients who need payroll administration, guidance on wage and hour compliance, record keeping, benefit administration, and other payroll matters. Salaried has experience in working on a variety of payroll platforms, and she has HR experience in a variety of industries. Our legal expert today is Curtis Urian. Curtis is an associate at the law firm of Merhab, Robinson, and Clarkson, and in the firm's transactional department, where he advises clients on real estate, finance, and employment law. In addition to his work with the firm, Curtis contributes articles to law journals and lectures on social entrepreneurism and conscious capitalism. He's also been recognized by super lawyers for the last 4 years as a rising star in California. Our tax expert today is Connie Bizza. Connie is a tax partner with CPA firm Wright, Ford & Young, and Connie specializes in tax planning for closely held and family-owned businesses, as well as distributors, service providers, and manufacturers. Her responsibilities with the firm include tax consulting and compliance for business and individual clients. Our banking expert today is Omar Morel. Omar is VP and Senior SBA Business Development Officer at American Business Bank and is known for partnering with his clients to help businesses grow, expand, and refinance debt. He is an expert at approving and funding SBA 7A, SBA 504, and California State Guarantee loans. Thank you all for agreeing to be here today. I know you guys are really busy. So today's agenda, we're going to start by discussing financial assistance for business owners, first with Omar, followed by tax implications of COVID with Connie, and then we'll move on to the HR concerns with Linda, Sarai, and Curtis. Because of the time constraints with our panel, we're going to have Q&A after each expert's presentation. So again, please make sure that you put the questions in the chat group, and Linda and I will try to get to them and make sure that your questions are answered. If we don't answer your questions, we will try to get back to you after the session. Omar, I'm going to turn it over to you to get us started off today.
Well, hi, everyone. I certainly don't look like I did in that picture. It's been, I think, about a week ago, we started aging in dog year. So this has been quite a time. And Linda, my coworker and I may be calling you for some assistance.
Anytime.
My wife and I, my wife and I have had fun working together. Yeah, a lot has happened over the last week. You know, the bankers in your lives have probably been working, 12+ hour days. We get up very early, we get to work, and we work into the late night. And a lot has changed. So I want to do a very quick recap of two of the existing reliefs to you. If you're a small business owner, and then we can talk a little bit about the Paycheck Protection Program, which I'm sure most of you have, if you're here, you probably have questions about that, so we can focus on answering your questions there. But let me start back at the top there, which is the SBA disaster loans, which you can apply for at covid19relief.sba.gov. And this is a loan that comes directly from the SBA, and it's part of their Economic Injury Disaster Loan Program. It's a phenomenal loan, and our bank has taken the posture since this whole craziness started, a few weeks ago or so, that this is really everyone's first stop, and it is a loan that is very inexpensive and is going to be paid back over a 30-year period. So it's great. It's just great money, and it's great assistance, and it's a loan that can be used for things that are not included in the Paycheck Protection Program, like accounts payable, inventory. Rent, because some folks don't have enough left over in their PPP loan to pay rent, and it's a loan that you can have along with the Paycheck Protection Program loan, as long as it is used for a different purpose. So a lot of questions about that. You can have both loans at the same time. You just have to use them for different purposes. So as long as you're very careful about your use of proceeds, it's perfectly okay to have both loans. Next up, for under the CARES Act, so these are the two benefits that came out of the CARES Act. Benefit number one, you see listed at the top there, is a 6-month, it says deferment, but it's actually 6-month forgiveness on new and existing SBA loans. So for any of you that have an SBA 7A, SBA Express line of credit, an SBA micro loan, a capital advantage loan, or a capital access loan, or an SBA 504 loan. So any loan that falls under the SBA program, beginning on your first payment after March 27th. So for the majority of you, it would be April 1st. Beginning April 1st, you will not have to make your payment to the bank or to the CDC if it's a 504 loan. And for 6 months, the SBA is actually making the payment on your behalf. So you won't have to do this. This is pure forgiveness. It will not be tacked on to the end of the loan. You're not accruing interest during this period. Now, the question then becomes, some of you may have made that payment, and the banks or the lenders didn't get, we didn't get instructions on how to handle this until March 27th or so. And so if you already made your payment, the bank will receive the payment on your behalf in I think it's scheduled for the 3rd week of April, so we're coming up on that pretty quick. And when the bank does receive that payment, they will reach out to you, or they've been instructed to reach out to you and ask you what you would like them to do with the payment that you made. You can either have it returned or you can apply it to principal. So this is a tremendous relief for those of you that are existing borrowers, or some folks on the line may be growing through this process or may need new equipment through this process. If you do look at financing new equipment via the SBA program, or if you're in the process of say purchasing a building, some of you were in escrow that you weren't able to back out of, know that the first 6 months of payments will be made on your behalf, and that program lasts for any new loans through September. Okay, so the new program, the Paycheck Protection Program, and I'm just going to give you the very high points, and then we can answer some questions. So Paycheck Protection Program, you're going to get 2.5 times your average monthly payroll. A lot of questions that I'm seeing from folks, still not totally understanding that, but it does seem like we're starting to get some understanding in the small business community. We're capping individual employees at $100,000 of compensation. You can include independent contractors or 1099 folks as part of the loan amount calculation, but you cannot use the loan proceeds to pay those people because they can apply on their own. In fact, they can apply on their own beginning today. So today the program opens up to independent contractors. See a lot of questions about union benefits. What if my employees are union employees? Typically, union dues are paid by the employee, so it's part of their compensation, so totally acceptable. So 2.5 times your average monthly payroll. You will then spend that. At least 75% of it has to go to payroll. The easiest way is if it can all go to payroll, and you'll have 8 weeks after the loan is approved to spend that money. And we'll talk about funding in just a second. I'll come back around to that. But you can also spend that on interest for existing debt. You can spend that on rent. You can spend it on utilities as well. Every loan has the same terms. It's an interest rate of 1%. You will have the payments deferred for 6 months. We still don't know if that means we're going to have to collect a very small payment after 6 months for the interest that accrued. We're still waiting for guidance on that. But there is no collateral, there's no personal guarantees, and there's no fees that you will pay. And at the bottom, I thought it was appropriate to still leave that bullet point on. That bullet point was there from a presentation I did a week ago. Today, we still have a lot of questions. So it changes every day and sometimes multiple times a day. But I will tell you that 2 days ago, the SBA came out and shocked the banking world and said, oh, hey, by the way, those hundreds of loans, sometimes thousands of loans that you've been approving over the last 5 days and spending, the wee hours and late hours of the night doing, those have to be funded in initially 5 days. And they told us this on day 5. Everyone lost their minds and said, well, there's no way we can do that, especially the smaller banks like us, the community banks, because there's just only so many bodies that we have. And so they extended that to 10 days. So if any of you do have an SBA authorization for these loans, you should have that loan funded, ideally within 10 days. However, the SBA has said, look, it's more important that you fund it right than fund it fast. So some of you may push into day 11 or so, because again, the last thing we want to do is, any bank, I shouldn't say we, the last thing a bank wants to do is fund a loan that sets you up for failure, because we don't want to loan you whatever amount it is for this loan, and then it turns out you're not going to have it forgiven.
Oh, Mark,
All
can
right.
you clarify something? Yeah. So you're
sure, absolutely.
Okay, so you're saying the bank is the one that's actually funding it within the 10 days, or the SBA
Correct.
is funding it through the bank?
Got it. Okay, so great question. So for the first loan I talked about, that's the economic injury disaster loan. That is funded by the SBA. What they started doing was they started to put out $10,000 grants. I don't know how quickly those are funding, but the intent of that $10,000 grant was to get money out quicker. And so that's the SBA disaster loan. If you do receive one of those $10,000 grants, by the way, you do have to reduce your Paycheck Protection Program loan by that amount. So that's one clarification. The PPP loan is being funded by the bank within 10 days. Okay, so this is the loan you're applying for from the bank. And again, this is guidance from the SBA and the Treasury, because the whole idea of this program is we're getting money out onto the street so that we're keeping employees employed. So they want us funding these fast. So, you know, especially if you're working with a smaller bank, you cut us a little bit of slack if we end up funding your loan on day 11 instead of day 10. It is quite a process. And to clarify, that is within 10 calendar days. Banks don't fund loans on the weekends. So anything that we approved yesterday is supposed to fund next Sunday. So just to give you a sense, you know, we're still working through this, and you know, some of those may go into Monday. Okay. So do we want to go to questions? I know I kept it very high level because I think generally people have a grasp of this from now, and now it's about, you know, kind of in the weeds, you know, what are the questions that we're seeing, because we're seeing quite a few of them.
Okay, sure. Thanks, Omar. I'm going to ask you also if you could speak just a little bit slower when you answer the questions, because people are still trying to follow along. So some of the questions that we have that came in are, this one is from a CPA firm. The partners in the CPA firm take draws, one of whom is a non-equity partner. Her income is reported on a Schedule K-1, not on a W-2. Can they include her quote unquote wages on the PPP loan?
So this is a tough question, and I don't like the answer to this, but we have been recommending, let me back up. One of the changes that came out of this program is that all of the risk and all of the onus to accurately follow the rules of the program are being put on the borrower and on the business. So every question that I'm going to answer, I'm going to give one blanket caveat, which is use your best judgment and understand that you are certifying to the federal government on risk of all kinds of nasty things, that you're acting in good faith and using your best judgment. So that's kind of the first point, and that's the overarching guidance of this program, is that the onus is on the borrower, the applicant, to agree to or to understand the program. That being said, in reading all of the guidance specifically for along this issue, if it does not show up and cannot be documented on the payroll report, so the W-3, I think it is, the IRS 940, I'm learning all of these documents that I never even knew existed, the 940 and 941, the payroll reports, if it is not showing up there, personally, I would make a decision to not include it in the calculation, because for all the reasons that I just said. And I would encourage those individuals to apply on their own as an independent contractor, which they can start doing today.
Okay, great. We have a question in from Sue, and Sue said, forgiveness, when we get our PPP, will we bring back beer tenders who have a significant portion of their pay in tips, and the tips were calculated in our average payroll, but we will bring them back in different roles until we can reopen our restaurant. Can we pay them the average that they make with the tips during this coverage period, and that will be used for the forgiveness calculation?
So we don't have guidance on forgiveness, which is really scary for the banks when they were told, hey, by the way, you've got to fund these right away. Because again, we still don't have guidance on forgiveness. However, reading the bill text, there is one piece that we know, which that is any individual's employees that made less than $100,000 had their salary or their compensation reduced by 25% or greater, that the forgiveness amount would be reduced. So my recommendation would be to go ahead and pay them based on the average payroll calculation, meaning that you would pay them whatever wages they have plus you would increase their compensation based off of however those tips were calculated. So yes, I would agree with that. I think it's the conservative thing, but it's probably the right thing in this program to go ahead and pay them as if they were receiving tips.
Okay, great, thank you. Sue also asked, was it 10 days for PPP, not EIDL, correct?
Correct. Yeah, that was a question I answered at the beginning. So
Okay.
the EIDL is the disaster loan that is coming from the bank. And then the goal of that program is to get the $10,000 grant out right away. The 10 days is for the PPP loan from the bank.
Great. And another question from Gladys, are union benefits paid by the employer on behalf of the employee included in the PPP calculation?
Yeah, so typically those benefits, my understanding, and again, I'm not a payroll expert. I've just picked up, I picked up so much great information. My understanding, and this may be a better question for Linda, but my understanding is that union benefits are paid by the employer on the employee's behalf, meaning that it's actually coming out of the employee's compensation, and thus it's part of the employee compensation, so it's included as part of the calculation. If another expert has a better answer on that, I would love to hear it because I need that info as well.
Okay, great. From Kim, in order for forgiveness, does 75% use for payroll expenses? Does this include gross payroll, health insurance, retirement? Oh, that's lovely. The chat just jumps.
Kind of all the other benefits, yeah.
Yeah, and retirement contributions, thanks.
Right. Yeah, so healthcare, continuation of healthcare benefits was a separate line item. So I don't know the answer to that, if healthcare benefits are part of the 75%. Retirement benefits are, and if you, hopefully you all have seen the 31-page document. It's called the Interim Final Rule number 1. There's a list, and if not, Linda, I'll send you a list of what is included in payroll costs, if you wouldn't mind sharing it with everyone. And I did it this way in this format. It was initially because people were asking questions about independent contractors, and so what I did was I just took that, and instead of having it be a really difficult to read paragraph, I bullet pointed it out, so it's simple to see. Okay, this is what we mean by payroll costs. Retirement benefits are part of that list. And so what I would say is this, is that if you have any question about, can I spend this money as part of my 75%, make sure it's part of that bullet point list that I'll share with Linda.
Okay, great, thanks. Question from Martin. We are an essential business, so we're still operating, but at a 30% drop off in revenue. When do we start tapping into the PPP loan proceeds for payroll expenses?
Immediately. So okay, again, we don't have guidance. However, what we have read is that I think the spirit of the law, if you will, or versus the letter of it versus the spirit is, we've authorized this money for the borrower. We've authorized the bank to loan this money, and that they'll have a guarantee. And then now the borrower has 8 weeks to spend the money. So here's my recommendation for you. Have that money come in, put it in an Excel sheet, somehow manage it, or keep it, keep that money kind of separate, if you will, and then use those funds to make your payroll. Make your payroll, pay your rent, whatever it is, whatever that breakdown is of how you're going to spend the money, actually use those funds and track that you're doing that. Now that could just be an Excel sheet that says, okay, here's my PPP loan. Let's say it was $100,000. Okay, week 1 I spent $20,000 on payroll. Week 2 I spent $20,000 on payroll. Whatever the case may be, just track that money that's going out. But you want to spend that money within the first 8 weeks of ideally of your authorization. And remember what I said earlier, you were authorized on one day, you may not be funded for 10 days later. So we just ate a week, a week and a half of your time. So I would definitely start to whether you actually spend the real dollar that came in or you allocated from that loan, towards those things, start spending that money right away and track. Just document everything, because we don't have the forgiveness rules, but I've got years as an SBA lender, and I can promise you documentation matters. So just make sure you're tracking everything.
Great. That's a great reminder if you've just joined the webinar that everything that we're discussing today is fluid, to make sure that you check with your tax and your law firm relating to your own businesses and questions. So as we go through the questions throughout the webinar, we're going to answer them as best as we possibly can, but you should always go back to your people to ask specific questions. We do have another question for you, Omar. We have a company that has less than 500 employees in the US, but over 500 if we add our parent company overseas. Are they still qualified for some of these forgiveness loans?
Okay, so there's two questions in there, and I'm going to go back to before I answer that question. Thank you, Denise, for saying that. I will tell you that there's been days where I've woken up at 4:35 in the morning, gotten to work, and 3 hours later I've got new guidance, and all of a sudden we're changing things. So when Denise says that these things are fluid, my goodness, they're fluid. But one thing that we do know is that in general, I think that, again, the spirit of this whole thing is that if people are operating in good faith and documenting what they're doing and why they're doing it, you should be okay. So I'll reduce a little bit of your fear. Okay, so now back to the question. There was two questions in there. I'm going to open up the PPP application so I can read you specifically what you are affirming to. Let's find that. All right. Oh, wrong one. Shoot. Okay, it's in here. I've got it. Okay, so here's the statement, and it's question number 7 on the Paycheck Protection Program. Let me move it over to this screen so I'm not looking off. Question number 7. Oh shoot. No. Oh, there it goes. Okay. Is the United States the principal place of residence for all employees of the applicant? And here's the key word: included in the applicant's payroll calculation above. So what does that mean? The box at the top left corner that says, what's my average payroll? If you are including the non-US employees in that calculation, you're not eligible. You've overcalculated. As long as you're only including US-based employees in the average payroll, you're checking that box and you're meeting that requirement. Okay. So there was a second question in there though, which was our parent company that's overseas. Mm-hmm. We don't have very good guidance on this. And our bank has been fortunate in that the one time it has come up where there was a company owned by an overseas entity, it was more of a situation where they didn't really need the funds. They were just kind of saying, hey, the government's giving free money, let's take it. So we said, hey, look, guys, we don't know the answer to this. We don't know whether the company can be owned by a foreign citizen. So I honestly, I don't know whether that company is eligible or not. And again, it just hasn't come up as an issue. We did send a question out to the SBA and to our trade organization. So I would work very closely with your bank in making that decision whether that company is eligible to apply. Now, if there is a 20% or greater owner that's US based, I think you're going to be okay. So let's say if the parent company was 10% ownership and there was a US citizen that owned 90%, you're fine. Scratch everything I just said. But if it's something different where the company is wholly owned by a foreign entity, I would work very closely with your bank just to make sure that the bank is comfortable moving forward on that loan, and then hopefully they can get that question answered for you specifically.
Okay, great. We have another question that came in from Sue. Can you clarify the coverage period? I heard it is 8 weeks from the date when you get the loan. However, you have till June 30th to bring employees back.
Great question. I hope to have the answer to that someday. Hopefully, they may give us the answer on July 1st, for all I know. Yeah, it's a great question, and I think it's a situation that a lot of folks are dealing with. We've actually we processed some applications on Friday the 3rd, which means that those loans have to fund by Monday the 13th. And to be frank, a lot of our borrowers aren't ready to receive that money because they haven't brought their employees back. Some are saying, hey, we're going to press forward and we're going to leave all this money in our savings account just in case we have to pay some back. We've actually had one that said, you know what, let's actually withdraw the application and reapply for when I'm ready to bring those folks back. I get the question, I get the concern. It's something that the banking community is screaming about because we really need guidance on forgiveness. This is a key issue. Let me make another comment as well. This is just a general comment. We have not seen the amount of money that has been used through, but you all know there's 349 billion that's been authorized, and there's some talk of increasing that. As of yesterday morning, that was the most recent that I saw. There was an email from NAGLE, who's the trade organization for the banks, all the SBA lenders in the country. They said it was at 120 billion as of yesterday morning. So we're still in good shape. The money is not going to be running out tomorrow. I think going into this, we thought, oh my goodness, this money is going to be gone in a day. And then the reality of it is that the banks have just been so slow at moving on this thing because the program has been such a mess. Not because the banks didn't want to participate, but because it was, it's kind of terrifying for the banks and for their customers. And now it's becoming okay, the banks are being held harmless, generally speaking, as long as we follow the rules. And now all of the onus is going on to customers. And so now customers are saying, oh, wait, time out. I get that there's no personal guarantee, but wait, I can go to jail for this? Okay, slow down. So I think it's people in general, now that everyone's had a little time to breathe, yes, the funds are being used. Yes, we will need more money. And I'm relatively confident that Congress will figure something out along those lines. But at this moment, it is not the urgent situation that it was a week ago.
So Omar, correct me if I'm wrong, but the good news about the PPP program is worst case scenario, you screw something up, the loan's not forgiven, it's a 1% interest rate, right? I mean, it's essentially free money.
Yes, however, it's a 2-year term. So you're going to pay that some very large amount relative to your business back in 18 months. So it's a hefty amount. Yeah.
Okay, we did just get another quick question that came in.
Mm-hmm.
If you are in full operation at this time, but you could have a supply chain issue that causes a closure or may cause a closure, can they still or should they still file for a PPP loan at this time?
I think the decision there is, do you want to keep paychecks flowing to your employees? And there's all the HR issues that Linda can go into on that end. But if you're going to be shut down, then essentially you're borrowing this money to funnel it through to your employees. That's essentially what you're doing, and they're probably going to be at home, and that's a good thing. I'm certainly not. We've got a number of folks that are doing that, actually, a number of customers that are doing that. So I wouldn't discourage anyone. But if you decide to move forward, that's really the decision that you're making. And then you'll also have 25% of the loan can be used to do things like pay rent, because some of you still have to make rent. I don't know what kind of deals you were able to work out with your landlords, but I'm sure they'd love to see a rent payment come in, or interest on a line of credit, or the utility bills, whatever the case may be. So I think that would be the decision would be, because the bulk of the money is going to payroll, and in your specific circumstance, those folks are probably at home and not being productive for your business. I think that's the primary decision that you're making.
Omar, let me clarify that though. I think what Rocco's asking is,
Sure.
like, today everything's fine, right? Like, he's running a full operation, everything's good, right? But it's sort of, like, my personal situation is the same thing, right? Like, everything's okay today, but there's a lot of unknowns out there, right? Like, if his supply chain all of a sudden, like, can't send him, you know, what he needs to be able to make his product, what happens? Like, he doesn't have a crystal ball. So should he apply now for the PPP loan, or does he wait until it gets to the point of as a disaster, right? When things start falling apart?
Yeah, I would go now, right? Why wait? You know, so I guess there's three scenarios, right? That we can see there. And thank you for clarifying the question. I definitely misunderstood it. So scenario one, everything goes perfectly fine. You're loaned 2.5 times your average monthly payroll, which is, you know, what, 20% of your year. And all of a sudden, everything goes perfectly fine. The government paid your payroll on your behalf, and your net profit went up for the year. Not a bad way for things to end up. Scenario number two, you hold off, and now you're in the lurch, and things suddenly shut down, and either you're at the back of the line, or or the money's run out, right? I guess those are scenarios 2 and 3. Then now you're struggling, and you're wondering what, okay, now what do I do, right? So that's where I would say, again, apply sooner rather than later. And then I guess there is a third scenario, or a final scenario, which is you go ahead and you apply for the loan, and then 3 weeks in, your supplier shut down, and you have to send everybody home. Okay, well, you still have the money, and you're still able to keep your employees on the payroll, and you don't have to furlough folks, and they're not going to the unemployment line. So at least you've bought yourself some breathing room during that time. So I would still encourage you to apply. And I would say the speed at which you apply also depends on your bank, right? We're all reading the news. We know which banks are struggling with this and which banks aren't. So I would definitely talk to your banker on whether that application should go in today, or whether you've got a few days to do it. Does that help? Did that answer the question? Okay.
Okay, great. I think that's all the questions we have right now for Omar. I'm going to take this opportunity for a break to thank you, Omar, for joining us today. I know you're really busy and you're answering all these questions for your clients. So just to be able to take the time today to join us and help answer these questions, we really do appreciate. I just put the slides again, the link in the slides, because the way the chat works on Zoom, the chat goes away, you can't always see it. If you didn't download the slides, download the slides. In the slides, we have Omar's information if you want to reach out to him or have some additional questions. Again, and I'm going to keep reminding everybody as we go through this, so I'm sorry if I sound like a broken record, but all the information that we're talking about is as of today, which is April 10th, and I almost want to say as of 11 a.m. because the way things are changing. So, so please make sure that you, when you download this information, or if you have questions, you either reach out to our experts or you reach out to your own experts because of the way things are changing. This is brought to you by Ethos so that we can help answer some of these questions that are on everybody's mind. They are all the experts are working, as Omar said, throughout the night, trying to gather all this information. So we do appreciate the time. Thank you, Omar.
Absolutely.
And
Omar, thank you so much.
Thank you all. Linda, I just forwarded you that email, and then again, if anyone does reach out to me for questions, just allow me a little time to. I try to respond to emails during breaks, so sorry if I take a little time to get back to
We
you.
totally get that, and
Yeah.
we so appreciate you taking time out of your, I know, very long, busy day to help our clients understand this stuff. So thank you so much, Omar. I hope you get some sleep soon.
Thank you.
All right, thanks
All right,
so
thank you.
much.
Goodbye, everybody.
Thanks.
And with that, we're going to move to the tax portion of our program with Connie. Thank you for joining us, Connie. We appreciate you being here today to walk us through this large chart.
Well, good morning, everyone. And Linda and Denise, I just want you to know I've been coming in and out. So if I'm doing that while I'm presenting, please let me know. I'm not sure what I can do about it, but I just wanted you to be aware of that in case.
Oh, we just froze.
It's spotty. So really a proc tax with you guys. I'm going to keep this at a very high level. As an accountant, we like to go into the details and the weeds on accounting and how it's calculated. I'm not going to do that so much in this presentation, but my goal is that you know if one of these might apply to you, that you reach out to your CPA or payroll advisor as we go through this, so that
Froze up again, Connie.
you're making sure you're getting the exacted. So please, you know, feel free to reach out to me as well if there's any further unique situations that might apply to you. Fairly changed again, yes. Is that that through July 15th are now not due until July 15th. So you probably have all heard that the April 15th filing deadline for individuals was extended to July 15th. Well, one of the things that hadn't been addressed yet was the June 15th second estimated tax payment for 2020 that individuals would need to pay. Well, yesterday, as I was preparing to do my slide, they changed it, and luckily they have now extended that to July 15th as well.
Mm-hmm.
So unless you have something very obscure, anything that you might have had due from a tax filing standpoint or a payment standpoint, other than payroll taxes, we're talking income taxes, they are not due until July 15th. So that was a real relief to us and to our clients not to have to deal with all of that right now, not have to worry about paying their taxes if they owe, and not having to do extensions or anything like that. So that's one thing I want to make sure you guys are all aware. So new yesterday was the second ES for 2020 is now not due until July 15th. So if you do owe, and you normally make estimated tax payments, you would either need to, you'll need to pay on July 15th based on what we know right now, your individual taxes due, and any first or second estimated 2020 taxes due. So that could change. Like I said, it changed yesterday. So just keep an eye on that. Make sure you're getting good advice on that. Something we all want to know through all of these, and the first two that are on the chart are related to the Family First Act. And so this is basically a credit because the government has told you with your employees that fall into this act that you've got to pay them during this time, whatever has qualified for that, and they're going to give you some form of a credit through your payroll tax filings. And there's also an ability to get an advance credit if it's more than what you would be able to get refunded through your payroll tax filings. So the key here is if you have any employees that have fallen into the Families First sick or family medical leave new provisions, there is a credit available to you through your payroll tax filings. So you need to make sure, this is assumes you're under less than 500 employees. So we want you to make sure you're reaching out, you know, if this applies to you, if you have any employees in this category. There's a lot of different rules behind how this gets calculated, so I'm not going to dive into those details. But it is a good benefit for employers who are having to pay employees who are impacted by this act. So make sure that you're paying, you know, you're working with your payroll service as well as your HR professionals like Linda, that if you have employees that fall into this, there is a credit available to you that you should be calculating. And it can be a good benefit for you. The employee retention credit. First and foremost, you cannot take this credit if you're obtaining the PPP loan, the payment protection loan that Omar was speaking about. So this is if you're not getting that loan, then, and you're fall into the qualifications for this. And let me just give you a few detailed revenues, and this is over a quarter calculation, or the government has ordered you to suspend operations because you're not an essential activity, then you would qualify if you're not getting the PPP loan, and it's a credit against payroll taxes. Or actually, I'm sorry, it's a credit against wages, and it's a 50% credit. There's a lot of if you qualify, and so if you're not again getting the PPP loan and you have the effect of you've been required to shut down, you can't work, or the 50% decrease in revenue over the prior year's same quarter activity, then you would qualify for this. And you want to make sure that you're working with your payroll service provider in terms of how you get this credit. And there's also a way to get an advance credit on this as well if it's more than what you can get through your actual payroll tax filings.
Hey, Connie, you broke up a lot when you were talking about that employee retention credit, and this is the first, least I'm hearing of this. So can you go over it again for us? Because you went in and out a lot right there.
Boy, I'm really sorry about that, guys. I don't know. Employee retention credit. The first thing to know that's important is that if you're getting the PPP loan, you cannot take this credit. So this is for everybody else that isn't getting the PPP loan. And what it is if you have a 50% decrease in revenue, or the government has ordered you to suspend operations because of COVID, then you qualify for this credit. And the way the credit works, it's a refundable credit, and it's against wages paid. There are different criteria, but it can be up to a $5,000 credit per employee. And it goes against your payroll tax filings is how you get this refunded to you, or you have to request an advance credit through a filing that you can do if you can't get it all through your payroll tax filings. So it needs to be applied to your specific situation, but it is basically a credit against, because you're still paying employees who are, anyone can qualify. Is the only caveat is the PPP loan. That's what can keep you from getting this credit. So did that come through better, Linda? Okay. All right, good. So, and again, if your particular situation warrants a further, understanding of your situation, I'm happy to go over that with you. Okay, the next thing is the payroll tax deferral. And basically, this is from the CARES Act as well. And you can't get this if you're going to do the loan forgiveness feature of the PPP. You can defer the payment of basically the FICA portion, the 6.2% of payroll taxes that are paid. You can defer the employer portion of that until December 31st, 2021 and December 31st, 2022. They basically let you split it up 50-50. So again, this is just a deferral. It's not a credit. So the first three items I talked about are a credit against tax. That means dollar for dollar you get back. This is simply allowing you to wait to pay it. Okay, so it is out there. You can take advantage of that again through your payroll tax filings. And so you have to be really working closely with your payroll service on this. And if you're going to request forgiveness on the PPP loan, then this probably won't be available to you. And some of this we don't have true guidance, so we're all still learning too as they provide more guidance. But as of right now, this is what we believe in terms of who can take these credits versus the deferral of the payment. Okay, the next thing I kind of wanted to just briefly touch on, because one of the things that happens when a big legislation is passed like this on tax side is they try to, and there were some things that were expanded from the prior tax act that we had. And what I want to just point out to everyone on the phone is that's a business owner or even an individual, is one of the things that they allowed now are net operating loss carrybacks. And as of these were not being allowed. If you had a loss, you were required to carry it forward. And they're allowing people to carry back their losses to prior years where they had income so they can get refunds. So who this applies to is if you had a loss in 2018 you need to reach out to your tax advisor and ask them if it benefits you to carry it back. In some cases it will, and in some cases it won't. So it's a case-by-case analysis, but if they come in prior years, you might be able to carry it back and get refunds from the IRS. Another thing that they released for because of COVID with the CARES Act is there was also a provision if you had too much in losses, they wouldn't let you take them all in 2018. So it's a kind of, they're two different things what I'm talking about, so I won't go into too many details, but there's a potential that your CPA could have told you, I'm sorry, your loss was too big, you can't use it all. Well, now they've released that and you can go back and amend for that and potentially get a refund if you're due one. Again, every situation's different and how it would get analyzed, but it's something that you should be aware of. The other thing that to point out is if your CPA came back to you when they did your 2019 return, if it's done already, and said, oh, I'm sorry, your interest expense was limited. I'm not going to go into the details on that, but you can go back to your CPA. And the big one, this was a technical correction, which was a mistake in the prior tax act that we had, the great big one that we all dealt with, is qualified improvement property. If your CPA came to you and said, sorry, that improvement property you put in place had to be written off over 39 years, it's very possible that with the release of this, that it now might be 15 years, 2 more refunds. But again, it's really important that an analysis is done to know, does it really benefit you or not? So just to keep it right now. And then the last thing that I'll close with is this isn't really a tax so much as just an ability to go for your employees, possibly short-term compensation agreement. And so I'm not an HR person by any stretch, and this really doesn't provide a lot of tax benefits, except that you can reduce hours for your employees. And if you meet certain criteria, they can qualify for unemployment. And then you can also use this, we believe, well, again, as Omar said, we don't have guidance on the forgiveness piece, but we believe they'll let you. So I know that's a lot of stuff. Again, after this, or depending on what questions we have in the chat, I am very willing to work with you to understand what your actual situation is, to see if any of these would apply to you. My main goal was to make sure you knew these were available so that you could ask the right questions to see if you should be applying them to your situation.
Sorry, yeah, okay. We don't have specific questions. I think, Connie, because your presentation went in and out quite a bit, it made it a little difficult. But you just that last part at the end, do you mind repeating that? Because that was where you froze up a lot, and I don't know if everybody got that information.
The part on the short-term compensation agreement?
Yes, I do. Yes.
Okay. So this is...
And she froze.
Not so much tax related as information that employers need to know in terms of if they're reducing hours for their team, they might be able to qualify for unemployment. And so this was something I just wanted to add in to make sure that everyone knew that this was there, because that is what some of our clients are doing.
Okay.
Okay, Connie, Rocco has a question. He said that what was the interest write-off? He missed that part because it cut out. I guess he's talking about the interest expense limitations.
Yeah, so on the chart where it talks about interest expense limitations, so that piece is if you were limited on your business level, this isn't mortgage, this is business interest. The rules have been eased up. You were limited, you may now be able to get more interest expense.
Okay, hopefully that answered your question, Rocco. If not, you can go ahead and reach out to Connie or I'll connect you.
Okay. We have a question from Sue. On the EIDL, on your chart, your notes show that you cannot take it if you obtain an SBA PPP loan forgiveness. Can it be taken with EMPL, Employee Retention Credit?
So we believe it'll reduce the loan forgiveness feature, but because that isn't actually available, no guidance yet, we're assuming that's what they are intending, but we don't know that for sure yet.
Okay. Another quick question came in. Can you go over the FFCRA healthcare credit?
Yes. So so under this credit, I'm going to give you some more details. Is if you have fewer than 500 employees, you're allowed a credit against Social Security tax for the employer portion of tax of basically up to $10,000 in wages per employee. The way that you qualify for this is if your employee, if you are paying the wages, care is closed down, and so this allows a credit against those leave payments that you're paying in terms of salary. So again, there's a calculation behind it, and it's up to 10,000 of wages per employee that are actually affected by this leave, and it gives the employer the FICA credit so they don't have to pay it.
Okay. Again, they should check with their tax person on all of this, as this is changing, very fluid. Another question, on the short-time compensation agreement, what documentation do you need?
Yeah, I'm probably not the best person to answer that question because I haven't really been involved with those.
Okay.
So I really shouldn't be the one. It's probably more of an HR question.
Okay, great. I think that's all the questions that have come in. I just want to say thank you to Connie for sticking it in there, sticking through this whole process with us. I know you were freezing and trying your best to do this. If anyone hasn't downloaded the presentation, please make sure you download the presentation. Connie's information is in there, and you can reach out to her or your own tax provider. As we mentioned, and I keep saying over and over, things are fluid, things are changing. Please make sure that you get the guidance that you need to help your business. So thank you again, Connie, for taking the time today. We really appreciate it. Now we're going to turn over to our HR portion of the program, where Linda will kick us off on talking about what is going on, what is happening for employees, etc.
Thanks, Denise. And Connie, thank you again so much for joining us. I really appreciate you and taking time out. So let's start with the HR agenda, everyone. I'm going to do part of this, and then Sarai is going to jump in, and then Curtis is going to present as well. So it's a team effort here today. So we're going to talk about sort of categories of employees. We've been breaking it down this way. We find that most of our clients appreciate sort of thinking about it in terms of different categories of employees and then giving you some specific guidelines for each one. We have a couple what to do if scenarios to talk about. There was new CDC guidance issued literally yesterday, I think, for what happens if somebody has an exposure at work. So we'll talk about that. And then we'll break down the FFCRA and talk about the emergency paid sick leave, the expanded FMLA, what documentation you need, and also some exemptions that people ask about for small businesses and healthcare. Again, if you haven't downloaded the slides, that's the link right there. Denise will throw it back up in the chat feature so you can download all of the slides at the same time. All right, so categories of employees, when we think about the employees, we break this down into 5 groups. You know, for some people, it's business as usual. You have people that are working at your normal work location. For some people, you have people that are working from home. For some, whether it's working at home or working at the office, you have working reduced hours. A lot of our clients have had to furlough people for various reasons, and hopefully right now, just a few people have actually laid people off. I think most people are hoping to be able to bring people back, and we'll talk about the difference between furlough and layoff as well. If you're working at the office, the most important thing is to remember that the business must fall under the critical infrastructure industry category. You want to consider, even if your business is a critical infrastructure industry, whether or not all of the employees need to work, because it could be that you just need some of them to work to keep the business going. There are penalties for violations. I couldn't find it last night, but I think Governor Newsom has signed an executive order that will allow utilities companies to shut off water and power to business if they find a violation. We were reading an LA Times article the other day about in Los Angeles, people being cited if they're continuing to operate, I think it was a gym or some kind of studio like that. So you can go to the government website. They've got a special COVID-19 website for California, which I've given you here, and you can download the PDF that has all of the essential critical infrastructure industries on it, and just make sure that you fall in there someplace. Now, if you have people working at the office, obviously, I think everyone knows it at this point. I feel like we've been nonstop saying this for a month now, but you want to make sure that you're using physical distancing, proper hygiene, of course, sanitizing, especially common work areas, bathrooms, lunchrooms, break rooms, things like that. We recommend you actually post signage in your office to limit the number of people in some of those shared spaces. One of our clients actually limits the number of people in a private office. So you can put signs up just to remember, to remind people, hey, if you go into the lunchroom, it's like one person per table, or maintain your 6 feet or whatever. You might want to stagger breaks and lunches within wage and hour laws, just to make sure everybody can take their required breaks and lunches, but not all at the same time. The other thing we recommend is what one of our clients gave us this title, and we stuck with it, called a Bust the Barricade doc. So it should be a letter that you put on your organization's letterhead that your employees can take with them when they're traveling to and from the office. So just on the off chance that somebody does get stopped to say, hey, why are you out and about? They can say, because I work at a critical infrastructure job in a company like that. That way, because we've heard of people getting stopped in Los Angeles County, it's happened up north. So just on the off chance that one of your employees gets stopped, they'll have something official that gives them permission to sort of move about freely. You'll have some employees that are working remotely, whether it's full-time or part-time. We recommend that you have them sign a telecommuting agreement. If you need one, email me, we're happy to share it. The key thing on the telecommuting agreement, and just in general, California law requires that you reimburse employees for reasonable expenses that they incur in the performance of their duties on behalf of the employer. So if you think about it this way, if they're working in the office, they're using your internet, your electricity, everything, right? But if they're going home, now all of a sudden they're using their cell phone, probably they're using their internet, maybe they're even using their own computer. You're going to want to come up with some level of reimbursement or subsidy toward that. The law doesn't say how much, how to calculate it. So I can tell you, like in our case, we give our employees $50 a month to cover their expenses, because we all work out of our homes, right? So just think about things like that. Come up with a number. It can be $10, it can be $50, whatever it is, but also put that in to reimburse them. Another really important thing with people working remotely, it's really easy for people to think that the wage and hour rules don't apply, and that's not the case. So you're going to want to make sure that they're still keeping their time, right? For hourly employees, that means that they're documenting when they start work, when they go to lunch, when they come back at lunch, when they leave at the end of the day, that they're making sure they're taking their 2 uninterrupted breaks, they're taking an uninterrupted lunch, they're starting their lunch before their end of their 5th work hour. All of those rules still apply even though they're working at home. So you want to make sure that you're complying with all of the wage and hour rules, and their employees, you remind the employees of that as well. If you're issuing equipment to employees for them to take home and work, we suggest that you use some sort of equipment log to track it, that they actually sign for it, so it's checked out to them and they know that they have a responsibility to maintain that and return it when they're done working and when they get back to the office. And then, of course, if you're working remotely, one of the difficult challenges is, how do you just keep everybody working as a team? we recommend apps like, there's Microsoft Teams, there's Zoom, there's Slack, there's Band, there's all sorts of different ways that you can set people up as a team so they can communicate easily. You might even schedule a happy hour, a coffee break or something, where no work is done. Just have everybody jump on with their drink of choice, whatever it is, and chit chat about what's going on in their personal lives, or, have crazy t-shirt day, or, bring your dog, to your Zoom day, or whatever you want to do, but something to just sort of make it fun and give people a chance to connect, since a lot of people aren't used to working out of their homes and may have that need for affiliation and being able to see people's faces and just stay connected. Okay. All right, there's people working reduced hours, and I'm going to turn it over to Sarai, and she's going to talk about the Workshare program and some other another program that's available for employers. Sarai?
Hey everyone. Okay, so let's talk about working reduced hours. And first thing we say, file for unemployment benefits right away. It's the first step each employee should take when their hours and wages have been reduced. The quicker the better. EDD is receiving thousands of applications a day since mid-March, and you definitely don't want to delay that process. However, people are receiving EDD letters already, which is great. It's pretty fast considering the situation, and they're already certifying their weeks, which is amazing. Additionally, there's also the Workshare program. And let me talk to you a little bit about the Workshare. I would definitely take advantage of this EDD program. So Workshare is an option the EDD is offering to employees to avoid layoffs and furloughs during the slowdown, like the one we're experiencing right now. The employers can elect the Workshare option when the employees have a reduction of at least 10% of their hours up to 60%. And it has its advantages. So this will reduce some of the burden on the employer by assisting with wages paid. Since the employer had a reduction in the employee's hours due to financial hardship, the EDD offsets the wages by offering a partial unemployment insurance to the employee. Also, it'll help reduce the cost of recruiting and hiring new employees once the business improves. There are some qualifications you'll have to meet. Be legally registered in California, registered business in California, have an active California state employer number, at least the 10% of employer regular workforce, and a minimum, or at least a minimum of 2 employees must be affected by the reduction. And you can find a lot of this information in the EDD website, or give us a call. We can help you out with any of your questions. So to give you a little bit more information on Workshare, let me give you a hypothetical example, okay? Don't quote me on these numbers. I just want to break it down for you so that you can see the difference between an employee going on full-time unemployment versus participating in the Workshare program. So let's say the employee makes about $1,000 a week. If the employee's hours are reduced by 50%, their wages would now be $500, right? But the max UI benefit is $450 a week, which means the employee won't be able to receive any additional benefits. So here's the same example, but the company is participating in the Workshare program. We're using the same hypothetical numbers. The employee makes $1,000 a week and hours are reduced by 50%, right? The employee makes $500, but instead of only making those $500, the UI takes into consideration how much the employee would have made if they only collected unemployment benefits. Let's say it was the max payout of $450, and this amount will obviously vary from person to person depending on their wages. So we're just using these numbers hypothetically. So the amount then will be calculated using the percent of reduction, which in this case was the 50%. So $450 unemployment max benefits divided by the 50% of reduction equals $225. This is their new UI benefit amount that they'll receive on top of their weekly wages. So instead of the employee making only $500 a week, or even less, $450 in UI benefits, their weekly total is now $750, and that definitely sounds like a better number to me. The application is pretty straightforward. It might be a bit of information at the beginning, but after that, it works pretty similar on the way employees certify their weeks by providing hours and wages worked for the date requested. So with everything going on, let's talk also about the additional information you need to provide the employees. So you can't over communicate at this point. It's important that you keep your employees informed with as much information as you can. We understand that information provided is changing often, but your employees are concerned due to all the uncertainty going on, right? Provide the information as to how the reduction in hours will affect their health care benefits, their PTO, holidays, any other benefits they might have with the company. A good example would be how meal periods can be waived if working less than 6 hours for those that usually work a full day. So both the company and the employee can agree to use the meal period waiver. So another program you should take advantage of, it's the SIDES program. So you probably have already seen the unemployment benefits letters coming in the mail. So SIDES, which is the State Information Data Exchange, it's the electronic way for employers to respond to the UI claims. Instead of receiving a letter in the mail, the company just signs up through this portal and receives the notices via the portal or email. It's a great option if you want to save some time going online and receiving the responses and notices instead of waiting for the mail. You can find them all in one same place. They're stored for 35 days. And especially with the mass amount of letters going out due to the increase in UI claims, it's possible to lose some of those letters in the mail. So you can also have a third-party administrator complete these forms for you. This will help you reduce your workload. It's super easy to set up. They just need basic company information. And when your notices are ready, they will notify you via email. So it's pretty straightforward. It's definitely two programs to take advantage of with the EDD. So that's it for my two sections. I'll give it over to Linda.
Awesome, Sarai. Thank you. Great job. Yeah, so just on the work share, just to sort of recap that, it's a really good alternative to having to furlough people. So let's say you have, 50 employees and you go, I don't need 50 employees right now. I only need 25. Well, maybe instead of, furloughing 25 people, what you can do is you can take everybody down by 50% of their hours, apply for the work share program. We've had some clients call us and say that they just applied at the end of March and they've already been approved. So we've been really shocked in a positive way at how quickly EDD is responding to unemployment insurance claims and also work share applications. So we had the link on one of the other slides. Just go check it out or just Google EDD work share. It'll pop right up. If you have questions, call Sarai. She's happy to walk you through the application. So just to make it clear, for regular unemployment, that's something the employee does on their own. They go onto the website, they apply. For work share, it's an employer application. There is a little bit more of an administrative burden every payroll period that you'll have to complete a form that says how many hours and how much in wages the employee made. But it does, as you saw in the example, give them additional benefits that they wouldn't receive otherwise. So it's probably worth trying that approach. Okay, so let's go back to our other categories. So obviously some people are going to be furloughed, and that's why we talked about work shares. Hopefully that we can push that off so you don't have to furlough people, but we have unfortunately had a lot of clients that have to furlough their employees, either because they're not an essential job or in an essential industry, or because business has slowed for some reason. So I want you to think of furlough as a temporary, like a leave of absence, right? They're still employed by the company, they're just not working because you don't have work for them. One thing that we learned recently is that if the furlough is going to be for more than one payroll period, more than 10 days, you have to pay out all wages and their unused vacation or PTO. Originally, when we started furloughing people, we didn't do that. Now, I will tell you that we have reached out directly to the DLSE, who administers or oversees the wage and hour programs. We're hoping that we're going to get an answer as to whether they're going to enforce this. It's in an opinion letter from 20 or 30 years ago. So we don't know if under the current COVID environment, they're going to be requiring this, but because there is an opinion letter out, we have started to recommend to our clients that you go ahead and pay out unused vacation time. We're hoping that that won't be enforced, but we don't know. Employee, if they're furloughed, should obviously file for unemployment benefits immediately. You're going to want to tell them how it's going to impact their benefits. Are you going to continue their insurance? If so, how much do they need to pay you that you know, if anything that comes out of their check normally. Are you going to accrue vacation? You know, are they going to accrue sick pay? What's going to happen while they're furloughed to any benefits that you may or may not offer? And then just communicate with them frequently to keep them engaged. You know, give them tips and resources. Check in on them to see how they're doing, see if they're struggling. One great resource for people that you can share with your employees is 211.org. It's a community-based organization, part of the government, that provides different levels of assistance for people if they're struggling to pay their rent or their mortgage, or they need food assistance, things like that. People can just call 211 from their phone, just like you would call 911 or 411. But they can also go to 211.org, put in their zip code, and then they'll direct you to the closest 211 organization for that area. So we just want you to know about that, to that organization as well. And then finally, of course, if you have laid off employees, layoff is a reduction in force or some kind of separation, and you're going to want to provide them with all of the normal documents that you do when somebody leaves the company, and of course their final paycheck and any unused vacation hours. Employees should again file for unemployment immediately. One other thing about layoffs, if you have 75 or more employees and you're going to lay off 50 or more people in a 30-day period, you may be subject to the WARN Act, which requires some specific notifications. So you don't have to worry about that for furloughs, but if you're going to have a mass layoff, you do want to look into that. Some of the notification, like giving people 60-day notice, has been waived, but there's other notifications for the government that you need to comply with. So you want to take a look at that. Okay, so let's talk about what to do if. So remind employees, of course, to stay or go home if they have any symptoms of COVID-19. The CDC lists, you know, dry cough, fever, sore throat, tiredness, difficulty breathing. If an employee tests positive, you're going to want to notify employees that a coworker tested positive. Do not identify the employee by name. For small businesses, it's going to be very obvious. It's going to be hard to keep that person's information, identity private. But what you need to do is just let people know that, hey, an employee that, you know, worked here last week on these days in this particular department or whatever tested positive. Any information you get should go in their confidential medical file. You can give people the date of the test results or when you were informed of the diagnosis. If you have coworkers that are in that, you know, close area, then you're going to want to go ahead and suggest that they seek medical guidance if they experience any symptoms. And of course, you're going to want to sanitize the environment. I'll also tell you, one of our clients, Quality Environmental, does sanitize for COVID-19. They're located here in Southern California. So if you do have a situation where you need somebody to come in and do like a thorough cleaning, they're specialists in the hazardous materials area. And so just reach out to one of us and we'll get you their contact information. Now, I mentioned earlier that the CDC just gave us new guidance yesterday and sort of relaxed the guidance in terms of employees going home if they've been exposed to COVID-19. So this is specifically for employees who may have been exposed but remain asymptomatic. Okay, so there's two big changes. One is they say the employer should measure the employee's temperature and assess symptoms prior to them starting work. So, you know, we have to be careful because the DFEH sort of says, oh, that's a medical test and you're not a medical provider. But at the same time, under these circumstances, everybody's saying, go ahead and take their temperature. We also know of a company that actually issued thermometers to employees and said, hey, self-assess and decide whether or not you should start work. So people can adopt their own internal policy on that, but you should be making sure that if they've been exposed, they remain asymptomatic before they come into the workplace. The other thing that changed is instead of saying, oh, you were exposed, go home for 14 days, they're saying the employee can work as long as they remain asymptomatic, but they should wear a face mask at all times in the workplace for 14 days after the last exposure. Okay, so that's a pretty big change. So instead of saying, hey, go home for 14 days, no, come to work, even though we think you may have been exposed, but just wear a face mask at all times. And if you look at the bottom bullet here, exposure means either household contact, meaning somebody that you live with has been diagnosed as COVID-19 positive, or they came in close contact, meaning within 6 feet of an individual with confirmed or suspected COVID-19. A lot of the calls we're getting is, you know, one of my employees said her boyfriend's, you know, coworker, tested positive. Okay, that's not considered an exposure under the CDC guidelines. Okay, so that second step removed doesn't matter. So just keep that in mind, because we get that question a lot from employees. All right, we're going to talk about the FFCRA, the Families First Coronavirus Relief Act. I'm going to turn over Curtis in a second, but this went into effect April 1st. No April Fool's joke. It remains in effect through the end of the year. It applies to employers who have fewer than 500 employees, which is a little bit unusual, because normally they'll say, oh, this applies 50 or more, 100 or more, and this one was they wrote it exactly backwards. You have to count all of your full-time, part-time, employees on leave, temps, where you have a joint employer relationship. All of that has to be included, but if you are under 500, this law applies to you. There's two parts to it. There's the Emergency Paid Sick Leave Act, and also the Expanded Family Medical Leave Act. Connie already mentioned this before, that there are tax credits available. There will be documentation required, and we'll talk about that a little while later. The other thing to remember is that you must post the required poster. Now, we talked about employees who are working remotely. You are allowed to send it to them via email. That's fine, just keep a record of that. You could post it on a shared drive or some place where they have access to it, and just make sure that they know that they have access to it. And of course, if they're working in the office, you can print it out and you can throw it up where the rest of your posters go. There are a couple of exemptions, and we'll talk a little bit more about those later. Before I turn it over to Curtis, Denise, to talk about the emergency paid sick leave, were there any questions about anything in HR we've talked about so far?
We have a question, and I'm going to read it as is, but then I think I might break it up because they weren't specific in it.
Okay.
So it's about furloughs, Linda. It says, if we furlough employee or employees, we're not sure in the question, are we required to hire back?
You're not required to hire back. And what we've been telling people is, again, we don't know how this is going to go. We don't know for how long it's going to go. So it's sort of like, Rocco's question earlier is like, well, everything may be fine today, but we don't know about tomorrow.
Mm-hmm.
The government's also updated like the critical infrastructure jobs, right? So we have to constantly be looking at that as well, because they may say today you're fine to work and tomorrow they may shut that down as well. So you're not required to hire them back, but you do have to keep in mind that at some point, if you decide you're not going to hire them back, then you need to treat it as a termination, reduction, forced layoff, whatever you want to call it, and give them everything that they're due at that time, their final paycheck, their benefit, all of that kind of stuff, right? So we're telling clients, hey, just take it on a week-by-week basis or a pay period by pay period basis. Just over-communicate. Like Sarai said, there's no such thing as over-communicating to your employees right now. No one's ever quit a job because their boss communicated to them too often, right?
Mm-hmm.
It doesn't work that way. So just keep sharing information. Tell them honestly you don't know what you don't know, and just, see how it plays out.
Okay, great. Another question that came in is, any thoughts on hazard pay?
Yeah, we do have some employers that are doing that right now. My answer on, my short answer on a lot of compensation is, pay what you got to pay to get the job done, right?
Mm-hmm.
And so in this case, yeah, we do have employers who have warehouse workers, for example, or healthcare workers, or all sorts of different type of people that are increasing pay short term, whether it's just a stipend. It can be a flat daily amount, it can be an hour, it can be whatever you want to do. But we do have some clients that are doing that because employees are pushing back. So, it's like $2 an hour more for the time being, something like that. You can just make sure a couple things. If they're hourly, you're going to do that. You're going to have to issue the 2810.5 form to everybody, just because there's a change in compensation. Make sure it reflects on the pay stub. If that's the only change you're making, you don't have to issue the form, but it has to be spelled out on the pay stub. I would not include it in their base rate. I would include it as a line item for a short-term incentive, something like that, because it's really hard to take it back when it's done. So I'd be really clear up front, like, hey, we're going to pay for this for the time, for the time being. But again, once we go back to normal, we're going to take that back.
Okay. Okay, great. So we have another question that said, we have a handful of employees who work about 10 to 12 hours per week doing social activities or bus driving for senior communities. Obviously, with what's going on, we have stopped all activities, therefore they haven't worked for us. We continue to pay their average scheduled hours, but are seeking the option of furlough. If we furlough these positions, will that impact the payroll protection loan? We anticipate the time they would remain off would be extended through the end of the year. Wow. So.
Yeah, my understanding is that if you take that PPP loan, the forgiveness is only if you bring them back by June 30th. So if they're going to be out for the rest of this year, that's a really long furlough. If you ask me, I don't think the law says you can't furlough people over a particular length of time. Maybe Curtis knows differently and can weigh in on that. But if you think it's going to be that long, I'd have to question whether or not you should just lay them off and then deal with it when you're ready to bring people back. Furlough to me is really a short-term option. These are highly unusual circumstances, right? But it's because we think that business is going to return, in the next few weeks, next few months, something like that. If it's going to be for that long, I don't know if I would put them out on furlough, to be honest with you.
Okay. For employees, let me see, let's look at this one. Okay, great. For employees whose hours are reduced and apply for UI through the EDD work share program, would they be eligible to the additional $600 a week in addition to their UI payment? Or you want to answer that part, or you want me to finish?
Well, I was going to say, let me say it a little bit differently. So employees don't apply for work share. Employers apply for work share, right? Employees apply for unemployment. We're telling people go down both paths at the same time, right? It's all going to come out from EDD. They'll figure it out based on Social Security numbers. They're not going to pay, under unemployment and then pay unemployment under work share at the same time, right? So tell people to apply for unemployment at the same time you're applying for work share, then you'll work it out with EDD. So that's the first part, right? The second part, ask me the question again, Denise. I'm sorry. The second part was.
I think it's because of the reduced hours. So their reduced hours. They said, or would they?
Oh, the $600.
Yeah,
great question. We don't know. So it's one of those things that, we've heard that under the CARES Act, there's this money that's been designated. We don't know yet how that's going to interact with California's unemployment. What if you just read what you can read out on the news and stuff, it sounds like that anyone that's collecting unemployment is going to be entitled to an extra $600 a week through the end of June. We don't know how that's going to play out. We don't know how EDD is going to administer that at all, because in theory, some people could make more money sitting at home than they could working, which isn't clearly in the intent of unemployment. I don't know how that's going to work. If it does work with work share, there's no guidance that we've seen. Soraya, have you seen anything online?
I was going to say no, I haven't seen anything. And considering the fact is only a 4-month thing for the $600 and work share is for a full year, I can see that kind of getting in the way too. But no, I have not seen anything.
Okay. Another question that came in: can I furlough employees for 2 weeks, bring them back for 2 weeks, and then furlough them again?
Yeah, I don't see why not.
Question: should hazard pay be included in the OT calculation, overtime calculation?
Yes, it should be.
Okay, great. Next question: I have a salaried employee and plan to reduce their salary by 20% today. What forms or documentation is required to do this?
I don't know that there's really any form. You should, I would think, put it in writing. I mean, you could use a payroll status change form, something like that. Again, I would just make sure you're communicating clearly whether this is a long-term thing, a short-term thing for a specific period of time, anything like that.
Okay, great. I think that's it for the questions right now. If you want to go on to the next section, Linda.
I do. I'm going to turn it over to Curtis, and then we'll take some more questions after that. And Curtis, if I misspoke on anything, feel free to correct me. Or if you have any additional insight on any of those questions I just answered, feel free to jump in.
Yeah, sure. So I just do want to make one quick comment about furloughs in the Warren Act. So a furlough is a temporary layoff, and under the Warren Act, a furlough is covered as a loss of employment. So if a company, a business enterprise furloughs 50 or more employees within 30 days, that employer must file the appropriate WARN notices. I just checked, and as of today, due to the current circumstances, approximately 884 California businesses have filed WARN notices. So those are just the ones that are aware of the law and are complying with it. So the takeaway here is that a furlough does trigger the WARN Act requirements. So if 50 or more employees are furloughed, then the WARN notices must be provided to the state government, to the state local leaders, and to the appropriate development offices. Okay, so now I'm going to move on, and we're going to talk about emergency paid sick leave. So this is a part of the Families First Coronavirus Relief Act, the FFCRA. As Linda mentioned, there are two major elements in FFCRA that apply to employers. There's emergency paid sick leave and emergency family medical leave. So emergency paid sick leave provides up to 80 hours of paid sick leave on top of any other sick leave benefit that an employer already provides. A major distinction to make here is that the new federal sick leave is different from those of us who are in California. It's different from the paid sick leave that we've become accustomed to. There are only 5 or 6 states in the country that have paid sick leave statutes, paid sick leave requirements. So paid sick leave is a fairly novel concept to most of the country. And a lot of the questions that some of the questions we were getting are hinging on this distinction, whether sick leave should be provided under the company's pre-existing California paid sick leave, or whether a person is eligible under the new federal emergency paid sick leave. So the distinction is really going to be, is an employee, as we see, it applies to all employers under 500. There's no minimum tenure, and employers are not required to exhaust any other form of emergency or paid sick leave before using emergency paid sick leave. So there are 6 qualifying circumstances that make employees eligible to use emergency paid sick leave. There we go. 6 circumstances to take emergency paid sick leave. 1, the employee is subject to a current federal, state, local quarantine isolation order. Number 2, employee is advised by health care provider to self-quarantine. 3, the employee is experiencing symptoms of coronavirus and is seeking a medical diagnosis. 4, the employee is caring for an individual who's under a quarantine or isolation order. 5, the employee is caring for a child whose school or childcare has been closed due to coronavirus. And 6, the employee is experiencing any other substantially similar condition specified by the Secretary of Health and Human Services. So let's talk about each one of these individually. What do these look like? So number 1, employee is subject to a federal, state, or local quarantine or isolation order. Originally, we believed this to be an actual quarantine or isolation order, meaning you cannot leave the house. Last week, we received the regulations from the Department of Labor on what this actually means, and it turns out that stay-at-home orders are included in this first category. Federal, state, local quarantine or isolation orders include stay-at-home. So this can be kind of confusing, because if the business is closed and the employee has to stay home, then that indicates that the employee does not have work that's available. And the number 1 condition precedent for an employee to receive emergency paid sick leave is that work must be available for an employee to receive emergency paid sick leave. So what this means is the work is available for the employee, but the employee is subject to one of these 6 qualifying reasons that prevents the employee from working. So this number 1 qualifying reason here has been a hot topic for those of us trying to figure out what it means. And it's really going to have to be analyzed on a case-by-case basis. We've come up with different hypothetical examples that work and some that don't work, and it's just not very clear. As we've said multiple times in this presentation, the rules and the guidance is changing every day. So if you think you have an employee that is qualifying under number 1, talk to Linda, talk to me, and we can help you figure it out.
Curtis,
Right.
what's your point of view on this last bullet here that we have in the slide? So, it's not technically in the governor's order that people who are 65 or older or in a higher risk category must stay home, right? That's general, like, hey, it's a good idea. You probably don't want to go out. If you have an employee that's 65 or older, or somebody that's diabetic or something like that, and they come to you and they say, hey, I don't feel safe working, I want to stay home, would you advise clients to pay out the EPSL under number 1?
So if the employee is able to telework or work from home, then that's great. Have the employee telework, work from home. But if not, we are recommending that employees who are in this higher risk category who have been recommended to stay home, that if they can't work from home and they're in the higher risk category, that they are eligible for emergency paid sick leave.
So even though this may go on for another month or another 6 weeks or something, at least 2 of those weeks would be paid. And then I guess if the employee wants to come back after that, they can.
Correct.
I mean, that's what's sort of strange about this one. Well, I'm in a high risk category, so I want my 2 weeks, but then I'm back to the same situation week 3.
Yeah, after that, we don't know.
Yeah.
All right, second qualifying reason. The employee is advised by healthcare provider to self-quarantine due to coronavirus concerns. So a lot of questions I'm getting on this is, employee came to me and said, I think I've been exposed, I'd like to self-quarantine. Doesn't work that way. The employee must receive a recommendation or be advised by a healthcare provider to self-quarantine, meaning the employee must go to a doctor or talk to a doctor or get tested and receive a recommendation from the doctor to self-quarantine. And if the employee self-quarantines, the employee must not be able to work. So for example, if an employee is told to self-quarantine, but they're able to stay at home and telework, that employee is not eligible for emergency paid sick leave. And you can, we'll get to this in a few slides, but you can ask for a medical certification from the employee's doctor stating that the employee is advised to self-quarantine. Okay, the third qualifying reason, employees experiencing symptoms of coronavirus and is seeking a medical diagnosis. So these are the symptoms that have been identified by the CDC. The Department of Labor has clarified that seeking a medical diagnosis is limited to affirmative steps to obtain a diagnosis. So if an employee is exhibiting symptoms and the employee says, I'd like to go get tested, time spent driving to a clinic, time spent waiting at the clinic, time spent receiving the test is all counted and qualifies for emergency paid sick leave. But time waiting for a test result does not qualify for emergency paid sick leave. It's affirmative steps towards and actually obtaining the diagnosis. And again, if an employee can telecommute, then of course they're not eligible. All right, the fourth qualifying reason, the employee is caring for an individual who is under a quarantine or isolation order, who's been advised to self-quarantine. So this is an overlap with FMLA. So this is a family member, or not necessarily a family member, but if employees are caring for an individual who is under a quarantine or isolation order. Oh no, sorry, it is a family member. It's like that. It must be an immediate family member or roommate. It does overlap with FMLA. And the person that is being cared for must be subject to the quarantine or isolation order we discussed, or has been advised by a healthcare provider to self-quarantine. And if the employee who is caring for an individual can telecommute, can work remotely, then that employee is not eligible. Now, I have received questions on this, and the decision on whether this employee who is caring for another individual can telework is really going to be up to the employee and up to the employer. If the employee says, I need to spend 10 hours a day caring for this person, then that person is probably not going to be able to telework and is therefore eligible for emergency paid sick leave. Okay. Fifth qualifying reason, employees caring for a child whose childcare has been closed due to coronavirus, or if the school has been closed due to coronavirus. This is going to be similar to the last reason, and we've been seeing this a lot. And the DOL has provided some guidance on this in the recent regulation. And this is if a parent is not able to work or telework because their child is now at home and that the parent needs to care for the child. It does not apply if there is another suitable parent or co-guardian or individual that can care for the child. So for example, if there are two parents working in a household and all of the children of the two parents of that family are working at home or are now at home because school or care provider is closed, then only one of those parents is eligible for emergency paid sick leave. Okay, and the last one, we really don't know what this means. This is really just a gap filler in case the federal Department of Health and Human Services identifies any other reasons why somebody should not work. So some documentation that you can request. The DOL has said that you can request and keep documentation. We also recommend that you keep documentation for your tax credit purposes. And the documentation that you can request is going to depend on the qualifying reason. So if you have an employee that's subject to a state or federal isolation or quarantine order, you actually have to have the employee must provide that specific order and demonstrate how that employee is covered by that order. If the employee has been exposed or test positive or has been ordered to self-quarantine because of exposure, then that employee needs to provide a doctor's note, medical certification. If a school has been closed and children are at home because the school has been closed and the parent needs to stay at home to care for the children, then some kind of written documentation demonstrating that the school is closed. All right, so if you go back and look at the different qualifying reasons, there's different amounts of pay that the employees are eligible to receive. I don't want to go through each example, just know that it's fairly simple to calculate. Just look at the qualifying reason and look at the amount that the employee is eligible to receive. One thing to note, if an employee is taking the Emergency Family Medical Leave Act, the first 80 hours or the first 10 days is covered by emergency paid sick leave and is paid at the 2/3 of the regular pay up to $200 per day. Then after that is covered, after the first 2 weeks, then it's covered by emergency family medical leave and is continued to be paid at the same amount. Part-time employees and commissioned employees have very specific ways of calculating their pay. Essentially, the regulations require you to take the last 6 months average pay to come up with the regular rate and then use that rate depending on the employee's circumstances, depending on how many hours the employee is regularly scheduled or how many hours the employee is expected to be scheduled. There's different methods and it applies to different situations.
Thanks, Curtis. That was great. And while Denise pulls together the questions, I saw it popping up a lot.
Mm-hmm.
I just wanted to just mention everybody, the link that's there actually takes you to a DLSE page that discusses the regular rate of pay. A lot of people think that's the same as base rate. It is not the same as base rate. So if you're paying base plus commission, base plus bonus, base plus, all sorts of other things, you're going to have to factor that in terms of the regular rate of pay calculation when you go to pay this sick pay. So just keep that in mind and click on that link or reach out to Curtis or one of us to help you. Denise, I'm sure we have a ton of questions.
Yeah, we do. Curtis, are companies required to update their written and sick policy based on the new EPSL?
No, so the Department of Labor was kind enough at the direction of Congress to draft a policy for employers. So all employers need to do is obtain a copy of that that posting, which I think I saw a link to here in the slides, and send that poster to all of your employees and post it in your where you keep all of your posters.
Okay, great. We have someone on the line who says they have an employee that is working from home because she is also taking care of her children. She is able to work, however, her hours have been less in the last 2 pay periods. Should she apply for unemployment, or do we need to give her EPSL?
I think I would need more specific details of that situation.
Okay. So the person who wrote that, they might want to circle back and write that. And if we don't get to you right now, we will follow up afterwards. Another question that came in, EPSL. So if we ask people to come back from furlough, and since we have stay-at-home orders and they decide to stay at home, are they eligible for EPSL? So what I would think they're saying is that they've already furloughed the people, they have stay at home. What are they eligible for?
If work is available and they're not able to work, then they are eligible for emergency paid sick leave.
Okay.
So that sounds like qualifying reason number 1. So if they reinstate employees from the furlough, but the employees must stay home because of a stay-at-home order or isolation or quarantine order, and because of that order they're not eligible to work, then they would be eligible, yes, for emergency paid sick leave. But if they are able to work at home, then no, they would not be eligible for emergency paid sick leave.
Okay. Another question that came in is, we have an employee that is salaried and qualifies for number 5 on your list. She's trying to work a half a day. Do we pay her hourly? And does she apply for the difference?
So if somebody is properly classified as exempt as being paid as salary, then they are paid by the work week, not by hours and not by half days. So this employee would have to be paid the full contract rate, the full amount agreed to for the salary.
Mm-hmm.
If the employer wants to change that, the employer would have to discuss changing the salary amount or reclassifying the employee as hourly so that difference can be made. And that's not a simple process, because if you're going to reduce somebody's salary, you still have to make sure that the employee is receiving no less than the minimum salary, which is twice the minimum wage for full-time work. And if you're going to classify somebody as hourly, there's rules on how frequently you can reclassify somebody's status so as to not avoid paying overtime. So I would not caution against employers reclassifying employees or changing pay, but I would caution employers to be careful and make sure they follow the proper wage and hour rules for reclassifying employees or for changing salary.
Okay. We have a question here. What about, and I'm assuming it's a 74-year-old employee, so because the way the questions are written, but what about a 74-year-old employee who says she doesn't want to stay at home? Does the employer tell her she should apply for EPSL? Because she's obviously in that higher risk category.
So the decision is going to be up to the employee.
Mm-hmm.
If the employee is able to work and the business is not closed due to the stay-at-home order, and the employee wants to work, then the employee can work.
Okay. Under your item number 1, how does item number 1 under EPSL apply if we are currently working as an essential business? Can an electrician elect to self-isolate and receive their 80 hours of sick pay?
So there's 2 questions here. Apply if we are currently working as an essential business. Number 1 is probably not going to apply. So take, for example, the current California stay-at-home order exempts 16 or so different sectors of the economy. So if business is properly exempt from that order, then work is available and employees are not eligible for emergency paid sick leave. So that's the first question. Second question, can an electrician elect self-isolate? No. The decision to isolate must come from a state or federal order, or must come from a physician.
Okay.
What about if the person's over 65 or in a higher risk category?
Then, based on the rules, we think they can.
For 2 weeks.
2 weeks.
Okay. Another question that came in, how do you compensate someone who is taking EPSL or EFMLA on an intermittent basis?
So the new statute and the new regulation don't really address this clearly. My recommendation on this type of question has been to take the average pay, meaning the regular rate over what has been the average pay over the last 6 months, and pay at that rate.
So Sarai actually researched this for one of our clients yesterday. It's clear if I think there's actually an FAQ, it's clear if they're going to say work Monday, Wednesday, Friday, and take Tuesday, Thursday off because they don't have childcare on Tuesday, Thursday, right? The law says you can work intermittently like that. Then you would just pay their 2/3 on those days. I think that's pretty clear. Where we're struggling is we have an employee who right now is working 4 8-hour days. She can't work 8 hours a day, but she wants to work 4 hours a day. And so we're trying to figure out, okay, how do we do that calculation if it's 4 hours a day? The best advice that we could come up with based on Sarai's research was, pay her regular wages for those 4 hours and assume that would be up to, that would be half of the $200 a day. And then for the other 4 hours, take 2/3 of her pay up to $100 and pay that on top of it. Does that sound reasonable to you, Curtis?
Yeah, that makes sense.
Yeah, there was nothing specific. Now, again, they issue FAQs all the time, so we'll keep our eyes peeled on that, but that's our best bet. And if I said that too quickly, whoever asked that question, just email Sarai or me or Ivana, and we'll show you what we came up with for our client.
That's good. That's actually a good reminder too, Linda, at this section. In the beginning of the slides or on the slides, you did post that to sign up for your newsletter. I know that you've been sending out newsletters as things are changing, as these Q&As are coming up, to keep everybody informed. So if you have not signed up for the mailing list yet, please sign up for the mailing list, and the newsletters will be there. There's also a link within the presentation that links to a page on your website that reviews all the previous newsletters and has some direct links to some of the other resources that people are needing right now.
That's great. I'm going to jump ahead, Denise, and finish off the slides, and then people can ask any more questions, and Curtis and I and whoever else can jump in on this. So the second part of the FFCRA is this EFMLA, right? The Expanded Family Medical Leave Act. This is a little bit strange the way they wrote this, because typically FMLA only applies to employers with 50 or more employees in a 75-mile radius. They specifically said, okay, this for people that are normally, or companies that are normally covered by FMLA, this adds another reason that employees can take 12 weeks of paid job protected leave. If you have under 50 employees, this is the only reason that you would be subject to FMLA, right? So it doesn't automatically make you subject to all the other reasons someone can take FMLA. So if somebody has a child at home because childcare closed, schools closed, that's the only reason that an employer would be required to give somebody this expanded FMLA. Okay, so again, if you have 50 or more employees, you may have other reasons to give FMLA, but we're just going to talk about this one expanded thing. Employees must have 30 days of service to be eligible for the sick pay we're talking about. It's available immediately. This is just for the EFMLA, they have to work for you for 30 days. Keep in mind, this is going to be there through the rest of the year. So they could come to you, if you hired someone tomorrow, they could come to you in a month and say, now I'd like to take this, please. Intermittent leave, as we've been talking about, is allowed if the employer allows it. As Curtis mentioned, the first 2 weeks are unpaid, but the employee would qualify for EPSL under reason number 5. right? So after the first 2 weeks, then the employer must pay 2/3 of the regular rate of pay, not to exceed 200 per day and 10,000 in aggregate. But remember, you've got the first 10 days, you're already paying $200 a day or up to, so that would be the other 2,000. So that's the max you'll pay out. You want to designate the leave as you would with any other FMLA leave. If you don't know what that means, you need to reach out to one of us to help you with that. But essentially, you're going to have to give them documentation. We came up with an app, with a request form. You're going to want to see if they're eligible and then give them notification. And group healthcare benefits must be continued as though they were regularly continuing to work. So you can ask them to pay the portion that normally would come out of their paycheck, but you would need to continue those benefits for the duration of their leave. The documentation that you're going to want to get is a signed statement that includes their name, the dates for which the leave is requested, the reason for the leave, which in this case is there's only one reason you can take this particular leave, and then a statement saying, hey, I can't work and there's nobody else that can cover for me, essentially. If the employee is taking a leave for his or own medical condition, then you can request the usual medical certifications because that would fall under the regular FMLA, okay, but not the expanded one that we're talking about here. Now, let's talk about exemptions because we get a lot of phone calls about this. There is a possible, and I italicize that word for a reason, a possible exemption if you have fewer than 50 employees. The exemption only applies with respect to providing the EPSL and FMLA due to an employee's need for childcare. It doesn't exempt you for all the other reasons. You can claim the exemption, but they're very specific about the reasons, and you would have to analyze, we would have to take a look at the specifics to your business, because basically what they're trying to get across to you is unless it's going to shut down your business or make it really hard to operate, you need to give this leave to people. They're pretty clear about it. So they go through, and I'm not going to go through those bullets, but this is not a situation where you check a box and go, yeah, we got less than 50, we want to be exempted. It doesn't work that way. There's no application, there's no form you fill out and file with the government that says I want to be exempted. You just need to document the reason for denying the leave and then retain the records and hope no one ever challenges you and it gets in dispute. There's also an exemption for healthcare providers and emergency responders to be excluded under the FFCRA. So like we, for example, have a client that runs urgent care clinics out in the Inland Empire. They don't have to allow their employees to go and take this leave because we need all of the healthcare providers we can get right now to be at work. Tax credits, Connie already mentioned about, so just remember you're going to want to keep your documentation on all of any monies that you pay under the FFCRA, so you can then apply for the tax credits later. One thing I wanted to mention, Denise, before we take any remaining questions is we actually do have another webinar that's scheduled for next week, and I forgot to include a slide in this. We're going to talk about government forms that you need to fill out, specifically the I-9 form and the new W-4, because we still get a lot of questions about the W-4. The I-9 form, we all know that we have to, first of all, a new form that goes into effect in a couple of weeks. It's been released a couple months ago, but it's required later this month that everybody use a new form. It's changed slightly, but not a big deal, but we'll talk about that. But they also gave us some new guidance on how to certify the documentation on page 2 by the employer when you have remote people. So there's a specific process you have to follow, and Sarai's going to educate all of us about that next week.
And we'll send a link out to that probably later today, or if not, first thing on Monday, so that if anybody wants to be able to join that webinar, they can.
What questions, Denise?
Okay, so I have a question. I'm scrolling through because I promised someone we'd go back to their question. Can we furlough people at their request, or do we need to apply a furlough to multiple people?
I don't know any reason you couldn't do it at somebody's request if that's what you want to do. I mean, we've done that before with layoffs, for example. Let's say you have 10 people and you only need 8. You could ask for volunteers. You may get 2 people to say, hey, I'll go ahead and be laid off for whatever reason. So I don't know any reason. Curtis, do you know any reason that you couldn't do it at somebody's request per se?
No, I don't see any reason why you couldn't do that.
I would think that you would need to be careful just on the application for unemployment insurance. They would still want to say they're furloughed. Obviously, you would have to have sort of an agreement with the employee that you're both going to say the same thing. It's not like employee requested to be furloughed, because that may make them ineligible to collect. So I would just say furloughed or something like that.
Linda, I want to make a comment that I just remembered about
Please.
furlough. When bringing employees back from a furlough, you're under no obligation to bring employees back from a furlough, meaning it is not job protected leave. However, you should be careful in deciding who you do bring back so you do not inadvertently discriminate against somebody. So if you bring back everybody except the pregnant lady, then that might be a disparate impact. That might be discrimination.
That's a great point. Because one of the things I always remind people, Curtis, is your intention may not be to discriminate, right? You're looking forward and you're saying, okay, we only need 8 people. We're going to not bring, we're going to let 2 people go, or we're going to furlough 2 people. But you have to look in the rearview mirror to say, oh, okay, now in hindsight, did I single out the 2 pregnant ladies? Did I single out the 2 African Americans? Did I single out the 2 people over 40 or whatever, right? In that example. So yeah, you want to be careful, but keep in mind that you can make decisions to run your business based on job category, right? You can shut down one department. You can, let the part-time people go first. You can do things like that as long as you're not doing it based on any of those protected classes.
Okay, good. A couple more questions. If an employee is teleworking, but the hours worked have been less because she's required to homeschool, does she qualify for EPSL?
Probably not, because the language of the law is unable to work. There's no language and there's no guidance saying reduced work, so it would have to be unable to work.
Okay.
So she could take, so let me make sure I understood that, Curtis. So the expanded FMLA clearly says that you can work intermittently, right? Which to me would include reduced work. So you're saying she wouldn't be eligible for the first 2 weeks of EPSL, but she would then be eligible for pay under the remaining time under the expanded FMLA?
I would not, it would have to be on that intermittent basis. So if somebody's working reduced hours, it should be gosh, I don't think we have an answer to that one.
Yeah.
Yeah.
We like to come up with the test questions for you because you're the brainiac one. And for everybody who's still on the call, Curtis actually read the 100 and whatever pages of the FFCRA when the DOL released the regulations. So thank you for that.
I also read the CARES Act too.
Oh, did you really? Yeah.
Wow.
He takes one for the team all the time. So
Yeah. Okay. Linda, could you clarify what paperwork we need to use? Do we have to give the regular FMLA paperwork for EFMLA, or is there a special form?
I don't know that the DOL actually released a form. They did.
Okay.
If we go back to the slides, let me go back to the documentation. This is what I took from their Q&A, I think, or their FAQs. It says they have to provide a signed statement that includes all this information. So what we did is we actually came up with a request form that was specific to this.
Mm-hmm.
So we capture the information that's needed so that when we go to apply for tax credits, we have the backup for it. That's really what's most important. Now, what I'm saying is if they're going to take a leave of absence, we always say designate the leave properly, right? You want to follow the guidance that you normally would. So you're going to get the request form, and then you're going to give them a document that says, hey, we're designating you. Yes, you're approved for this leave. Here are all of the rules around the leave. So for example, it is job protected. Their benefits remain in place, things like that. Curtis, do you remember if the EFMLA requires for reason number 5 for the childcare, does it have any sort of specific requirement to designate it in any different way?
For documentation, is that what
Yeah.
you're asking? It just requires that there be some kind of documentation. So you can get a letter from the school or a letter from your daycare provider, something that states that the children's normal source of care is not available. And then whether the employee is able to work or not work because the children are at home is up to the employee.
Yeah. So just remember, so we're talking specifically about the expanded FMLA. If an employee is diagnosed with COVID-19 and they're going to be, and the doctor says, hey, this is a serious medical condition, and they're going to not be able to work for some period of time, you know, for the next month, for the next 2 months, whatever it is, they may qualify under regular FMLA if the company has 50 or more employees and are subject to it, right? So if that's the case, you're going to want to designate the leave just like you would any other FMLA.
Okay, great. Here's another question that came in. For childcare reasons, do we follow the guidance of who qualifies as a child under FMLA? For example, I have employees who state they need to stay at home due to kids who live with them, but they are not their kids, but their girlfriend's children who live under the same roof.
The DOL actually did provide guidance on this topic, and it is a little more narrow than what we traditionally see under the FMLA. The situation is going to depend on a case-by-case basis, and we'd have to refer to the regulation that the DOL issued to see if that's a scenario that counts.
And people can find the FAQs out there. Just, again, if you just Google it, you'll find the FAQs. There's, I think they're up to like 79 or something like that, but you can go to their website and look to see if you can find, you know, their definition of it.
Okay. Another question that just came in. If someone gets ill with COVID-19 and their recovery takes longer than the 2 weeks of EPSLA, are there other benefits available?
I mean, in theory, you could allow them to use their regular sick pay or allow them to take vacation or something.
Okay. And with that, I think that's our last question. So do you want to sign it off and thank everybody, Linda?
Yeah, I really appreciate everybody. Curtis, thank you so much, because I know you are so busy right now as well with employers calling and trying to get everything done. So thank you so much for joining us. Thanks again to Omar and Connie. And Denise, thank you to you for moderating. I totally forgot to include your slide after I put all the rest of the slides in, so sorry about that. But Denise is our awesome marketing guru, so thank you. Thanks to Ivana and Sarai as well. And everybody that joined us today. Again, we're attempting to record this, so fingers crossed that it works. We'll have it available. Download the slides, and by all means, reach out to any of us if we can help you. All right, so everybody be well, stay safe. See you hopefully soon in person.
Thank you. Bye.
Bye.